Now, as you can imagine, I get asked quite a lot of questions around Renko trading, and one of them revolves around the concept of wicks and the Renko block. Now, to me, from my experience and history, I learned Renko charts way back with a Japanese investment bank in the mid-90s. That's where I first saw them. Didn't see wicks on those blocks. So to me, I've always used the traditional non-wick approach. But with technology as it is, enhancing what was, then you can do a lot more with Renko charts nowadays than you used to be able to. And the concept of wicks added on to the Renko block is one that, like I said, I get asked quite a lot about. How do they work? What do they mean? How can I use them? Well, in this video, I'm going to take you through some examples, show you how they are constructed, why you might want to use them, and give you a strategy idea as well for you to take away and use. So with that, let's get into the detail. So for the purposes of this video, I'm going to be using TradingView, one of the most common technical analysis platforms out there. I'm going to be using one market, and you can test it across other markets. But for this example, I'm going to use the S&P 500 E-mini futures contract. Ticker, as you can see up in the top left there, is ES1. And I've used a $20 block size, because that allows me to explain this whole concept a bit more easily. Other than that, there's not much else you really need to know, but that's our starting point, the $20 block, ES1, S&P 500 ticker set up on the Renko chart. Now this is, like I said, the raw Renko chart without the wicks. How do we get the wicks onto the chart? Well, it's very, very simple. All you have to do is right click on the Renko block, hit the settings, and you'll notice a box there right in the middle, unticked. If you tick it, and let's close that out, you can now start to see the ticks added. Let me just highlight a few for you, scribble on there. You can see all sorts of those ticks added. So let's now just look at those two setups side by side. Remember, this is exactly the same with the wicks. It's still the 20 block size, still the same ticker, exactly the same setup. And now, like I said, we've added on the wicks. So here we have them side by side. On the left hand side, we have the traditional non-wick approach, and on the right hand side we have the wicks. Now I suppose let's just drill into a few easier examples here. Right at the top there, you can see a lot of wick activity all around there. Go over to the same period on the left, then you don't get that wick activity. Now, important point to note, let me click into those settings again. The source, this one is currently set up by open, high, low and close. The one on the left wasn't. Let's just flick that back to close. Now they look exactly the same, other than the wicks. And remember, the granularity in there, as I'll come to explain in a minute how these wicks are built onto the charts. Very important that you're sort of singing from the same hymn sheet when you're doing your comparisons. So what do these wicks actually mean to us? Now again, let's take the example of those highs around there. What is actually going on? Well, really, it's a bit like if you think about the ordinary candlestick chart. They're showing you the in this example, this very top high that we're looking at here, it's showing you how far the actual price moved before the setup completed. So remember, we're using a $20 block size here. We can see that if we draw on our, let's just draw a line through there, which was roughly about 4,600, this bar went down to 4,561 and a half. So it wasn't quite enough to complete that block. But you're probably asking yourself, why is that wick so long? Surely if it's just showing you what happened within that move, then that block would have turned red, and then the wick wouldn't have been quite as big. Remember, it's about the price movement before the close of that setup. Now, we did have a big pullback there in that price, but it didn't, I suppose when that block closed, end up there. It moved on back and created this top block, but there was a lot of price action. Now, to someone who doesn't use the wicks, they wouldn't see that on their chart. So it's sort of giving you more information about what has actually happened around that block. Now that's quite interesting, that one, because then the price did turn and headed south after that. But you can see the very next block, let's just clear that noise off there on the chart. The very next block also produced a wick, which is very interesting at the top here. We can see that line, just going through there. Not enough to create that reversal. Remember, that's got to move 2 blocks. Let me see if I can badly colour them in. You've got to have a block there, and before you're starting that full reversal. So you've got that U shape in there, and it wasn't enough, like I said, to create that complete change around, but there was enough there for one whole block of movement and a bit more to the upside there before it then moved on down further. So I suppose the takeaway from this is that really these blocks give you more transparency around what's actually been happening, a bit like the candlestick chart, than the Renko block. Does it create an advantage? I'm not so sure. Like I said, I've not used wicks in my Renko trading and done very well off the back of it. I haven't really needed that knowledge. Where I think it might be an advantage is if you're more of a day trader maybe. But just before we get on to some other concepts, just want to show you that wick setup versus what the actual candlestick chart looked at the same time. So you now see the ordinary candlestick chart for the S&P 500 there on the right hand side, and our wick chart on the left. Now let's focus in on, let's just draw it on so you can see where I'm focusing on, this action here. Now I've drawn the bars on the candlestick chart. Now this area here, that represents the one full block size. Now if we hover over, say, that wick there, which just here, let me just highlight that, we can see on as the mouse tracks that it's this area of activity here. Now notice we have this little bit of wick above here. That is this difference here. See that bit of price action noise there? That was that bit above that block, and then we have, like, say, the 20 block below it, and it obviously this 20 block here, and then that next 20 block, and you can see how the price tracks on down. Doesn't create any noise above these to create further wicks. So just a little example there of the comparison of the candlestick chart to the wick Renko chart, probably the closest comparison I can draw there. Let's see or think how we can actually use this information. To me, I think you've got 2 options. I think you can use it A as a continuation, or B as a sort of reversal flag. And there's some setups that you probably would like to look for. Now the first one I call the reversal. Now you can see the price reverse in a few places on this chart. You've got one here, for example, and then one here on the right. Now what happened on this one, there was more sideways action before the price moved on down. And you might say, well, I've seen this white bar, candle block, wick block here, and the price reversed. What we're looking for here is an engulfing setup. So what do I mean by the engulfing setup? I'd want to see this red bar and its wick beating the bar to the left, engulfing it all. And to get the full engulfing, you'd need that down to this level here. And in this instance, it hasn't happened. You can see that this big long wick here on this green block is far lower and doesn't allow that red one to the right of it to engulf, you know, that whole picture. So I would have ignored that as an engulfing setup. But go over here to the right hand one, you can see you've got the bar, the red block and wick actually engulfing the green one. It's higher and it's lower. Now to me that is a better sign of a reversal. So as I say, it's not just a given that, like you say, you see that set up and it's a sign of a reversal in the price action. No way. But like I said, if you look for a more defined action like the red block in our examples here, it engulfs the green one, including the wicks, then it's a better indication. And also mentioned the idea of continuation. Now this idea is a bit more like the Heikin-Ashi chart if you're familiar with them. Now when you see a Heikin-Ashi chart, the trend is strong when you get the wicks, you know, above, you know, strong to the downside. If you see the wicks above, you know, the main body of the candle there. And sometimes I like to use that, well, sometimes an idea to use is if you see the candle, the wicks above the blocks, as a signal that maybe, you know, the strength is more to the downside, because that's where the price action actually completed. But again, it's not a given. So there's an example of 3 in a row where the price moved up. But if you notice here, for example, and here, we had like that strong downward push, but then you would expect maybe the blocks to come down on into here because of that, you know, 2 strong downward moves, $40 of, you know, price action there. But no, we got this reversal in here. So again, it's not always a given. It's a, you know, it's a very subjective process when you're looking at this price action per se. So what I would do is, you know, underneath the chart here, I'd use maybe a stochastic, a confirming indicator that was telling me that it was moving or it was continuing in the way of the trend. And because it's so subjective, you know, you could interpret that differently as well. You might say that because you can see the wicks, you know, building up, that actually it's a sign of weakness in the price, and the price is going to, you know, possibly, you know, reverse the other way. So again, use an indicator on the bottom to help you with that timing action, because you've got some other examples here. You know, when the trend's really strong, you don't see any of those wicks at all. So another idea for you there to involve. But I suppose if I was summing up all of this, is I don't use the wicks because to me it doesn't really enhance my trading that much. So I've tried to explain them here, that they're adding a level of granularity to the chart to help you tell the story of what's going on. It's nice, but is it executable? It's difficult, it's subjective. Like I said, I'll try to throw some ideas in there for you, but you know, you could probably pull them to pieces either way just on the price action, you know, themselves. You'd have to do some serious back testing to see whether those ideas work. Like I said, I do not use them. I've not back tested them. I'm just throwing out ideas, suggestions, thoughts there for you, how you could potentially use them. But the idea of the wick, like I said, is to show you how much, you know, the price has moved relative to the previous blocks. So you can see the extent, I suppose, that wasn't visible to the ordinary Renko user, that there has been some volatility in the price action that you might want to consider into your trading. But sometimes the simplest trading, or the best trading, is the simplest trading, and adding this extra, to me, well, does it enhance it? Like I said, I don't really think so, but at least you're wiser now on what the wick chart on the Renko is all about. So there you go, at least you've got a better idea now of what the wick means on the Renko chart. And if you like today's video, please give us the thumbs up. Don't forget to hit the subscribe and bell buttons to receive future notification of all sorts of content available coming your way on the TheStopHunter YouTube channel. Now, I've also put together a very in-depth guide to Renko charts, a playlist with a very, like I said, detailed collection of videos that I've put together over the last year or so on the channel, and work your way through them, and you'll soon be able to master the Renko chart. A lot of strategy ideas in there as well, and that playlist is coming up right now.